What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Today I wanted to talk about something a little bit different. So I hear a lot of people, they tend to just sort of lump all crypto into just cryptocurrencies, right? But in reality, that tends to just refer to some of the older Generation 1 coins, such as Bitcoin and Litecoin and things of that nature, when in reality, we really should start looking at this as more of digital assets. I mean, if you consider the market cap just 2 years ago, we were sitting at roughly $9 billion, whereas today, plus or minus, we're sitting around roughly $300 billion. That's a tremendous increase. So you have to realize that this new asset class is going to transform every industry in the economy, from financial services to pharmaceuticals to media, manufacturing, voting, supply chain logistics, and so many more ideas that we haven't even thought about yet. So understanding these various types of crypto assets and the different functions that they serve is crucial to thriving in this new decentralized digital economy. That being said, let's dive in. So the first type of digital asset is literally cryptocurrencies, like as in what we refer to the whole space as. But really, these are cryptos whose sole purpose is actually as money. In the beginning, all cryptos were in fact cryptocurrencies, obviously starting with the granddaddy of them all, Bitcoin. Simply put, they are instruments of exchange, stores of value, and units of account. The most basic use case for distributed ledger technology there is. Example of these besides Bitcoin would include coins such as Litecoin, Monero, Dash, Pivx, and even, newer ones, for example, like Nano. So these are just to name a few. The next is platform currencies. These coins or tokens are used essentially to pay for transactions that occur on the network. For example, Ethereum has Ether, Icon has ICX, Cardano has ADA or ADA, right? So on, so forth. This category of tokens is sometimes confused with cryptocurrencies because technically you could use Ether as a currency, and in fact, many people do. However, its initial purpose is for paying network fees associated with transactions on the network or the execution of the smart contracts themselves. So this area does get a little bit fuzzy. We know for a fact that Bitcoin is definitely Generation 1 digital asset. However, Ethereum really opened up the doors for, expanding into blockchain 2.0, where you have smart contracts, privacy, the emergence of non-native asset blockchain tokens and capabilities. However, that in itself could be honestly a whole nother video on its own. But for our case and purpose, that would probably describe the next, which would be platform coins. So moving on now, this kind of expands upon the platform coins. We have utility tokens. So while platform coins and utility tokens at first glance may seem like the exact same thing, there is a slight difference to note. These tokens are programmable blockchain assets that literally have utility in an application. They are often required for a particular service or even sometimes offered as a reward. So sounds kind of like mining, right? Well, sort of, but not really. So take the example of Golem, which aims to aggregate the power of the world's smartphones and put them all into basically a decentralized computer that anyone can use to run computations in exchange for Golem network tokens. Or even something like, for example, prediction markets like Augur. So think Amazon Web Services, but without Amazon. So the next category I wanted to talk about is stable coins. It's pretty much self-explanatory, but these tokens are designed to maintain their value and hedge against the volatility usually associated with most cryptocurrencies. An excellent example of this would be USDT Tether, which is supposedly backed 1-to-1 ratio of dollars in Tether. So technically, one Tether equals one US dollar. The same goes with these other currencies such as True USD. We also have others that are pegged to real-world assets as well, such as Digix DAO's DGX token, which is backed by real 1 gram of gold per each DGX. Although DGX could also be technically considered a natural asset token, I'm going to get into that later though. But for all intents and purposes, essentially these are stable coins. There are many of these so-called stable coins springing up recently. You can also look at Maker, DAI, and even the recent stable coin Alchemint on the Neo ecosystem. The next one that I want to talk about is non-fungible tokens. So simply put, these tokens are one of a kind. Each token has a unique hash that can be pegged to real-world assets or even digital assets, but the key difference is they are not interchangeable. Okay, so for example, ERC20 tokens are forms of Ethereum tokens that represent fungible assets. So these assets are completely interchangeable. It's like if I gave you $1 and then you reached into your back pocket and you gave me a completely different dollar. Even though that's a different dollar, it's still the same amount, right? So though they are physically different, they have the same value, $1. However, for example, here's something like a non-fungible asset, right? Say I give you an original 1973, prestigious condition of Pink Floyd's Dark Side of the Moon. And then in turn, you give me a 2018 remastered edition of Dark Side of the Moon from Best Buy. Well, I mean, technically they're the same exact album, right? They're both the same record, but they're really not because, they're the same, but they're not worth the same value, right? Let me give you an even better example. So let's just use one that we're all familiar with, CryptoKitties, right? So this is an app that enables users to purchase, raise, or even breed unique virtual pets. Each kitty on the Ethereum blockchain has its own unique ERC721 token associated with this. If you're confused about all these different types of token standards, I have a video that I made on it the other day. Feel free to watch that. You'll understand exactly what I'm talking about. But what I'm trying to say here is that each one of these are specifically unique. So companies like Everledger and others are enabling the tracking and trading of these rare and very real collectibles on the blockchain. We've even seen Major League Baseball utilizing these types of standards as well. The next one that I want to talk about is exchange tokens. Now, okay, although you can argue that these are technically in the same vein as utility tokens, I wanted to give them their own unique category since they have really earned their place in the cryptosphere lately. These tokens include examples like Binance BNB or the Huobi token. Although they differ from exchange to exchange, they are generally used to cut down trading fees, rewarded through affiliate links or signups, or based on the amount you own, you can sometimes receive a percentage of the overall exchange revenue for supporting and providing liquidity to the network. Recently, we have seen a new onslaught of exchange models which offer mined coin rewards or actually pay you for trading. Exchanges like the controversial F-Coin or even BGogo, which has recently sprung up in late, are also included into this category. Although at the time of making this video, these models are relatively new and we really don't have an idea on them to pass any real judgment or give any proper label just yet, but I wanted to include them in their own special category because we have seen they have had their own real unique use cases. So that's why I kind of gave exchange tokens their own category. Now, these next three categories, I don't consider them as important right now. However, they may become important down the line, so I decided to just include them in this video anyway. So the first one that you have is security tokens. These are native digital bonds, equities, or other securities that trade peer-to-peer without financial intermediaries. Although, for all we know, all tokens could technically be considered securities if the SEC has their way, but for now, time will tell. So, for example, the Canadian Securities Exchange intends to get into this market. Others would be wise to follow. ICOs have already appended venture capital. Bay Street will be next, and I wouldn't doubt it if Wall Street is close behind. The next one is natural asset tokens. These represent tangible goods like gold, oil, or carbon in peer-to-peer markets with real-time settlement. Although these may somewhat blur the lines with stablecoins, I want to point out that these essentially represent commodities. For example, the Royal Mint partnered with the Chicago Mercantile Exchange to create Royal Mint Gold, a digital gold token backed by the gold bullion in Royal Mint's vaults. So you won't find that one on CoinMarketCap, but I'm telling you, it does exist. So this just goes to show you that the entire commodities markets is up for grabs, as is mass market carbon trading. Okay? And the final one that I wanted to talk about was Crypto-Fiat Currencies. Although these could be argued that they are stable coins, I'm talking about ones that are generally issued and governed by central banks. So for example, back in 2017, Venezuela shocked many by announcing the launch of the Petro, so a cryptocurrency that was backed by the country's vast oil reserves. The Federal Reserve and Bank of America should take notice. Implemented properly, crypto-fiat currencies can make markets more efficient efficient, transparent, and inclusive, and central bank policy more responsive to crises and shocks. So in summary, this Cambrian explosion of crypto assets could jumpstart one of the greatest reorganizations of wealth and transformations to the global economy in our history. This represents a second kick to the can, so to speak, an opportunity to assure that everyone has the ability to benefit from the proprietary of the digital age. To truly realize that promise, however, it's time we looked at crypto assets not just as digital gold, but as digital everything. So that being said, I want to say thank you so much for everyone that keeps liking, subscribing, commenting, turning on the bell notifications, joining the Telegram chat, coming back to the channel. I love you guys. You're the reason that I do this every single day. That being said, my name is K-Dub. This is Crypto Zombie. Until next time, stay crypto and peace out.